A little bit of softness coming through for the rand, trading up around 6.66 this morning. That's after getting down to below that R6.60 mark yesterday. Why the turnaround?
Morning, Stephen. Well, yesterday we saw a bit of strength come back into the dollar after those better than expected US ISM numbers, but then it started to weaken, particularly against the euro in the latter part of the afternoon. So most curiously, we had the rand weakening against a seemingly weaker dollar as well, and we think that that's really attributable to the fact that the volumes are starting to normalize slowly after the holiday season. Generally, what tends to happen is that in thin volumes, rand trade can be very exaggerated, and a lot of the recent rand strength has been attributed to the announcement that was made that South Africa will be joining the BRIC group of countries. So as people return from their holidays and as that news has been absorbed by the market, we would expect that the rand would continue to trade at sort of more normal levels headed into next week.
Of course, the rand has run very hard over the past couple of weeks, and I should imagine a lot of that could be ascribed to thin holiday trade as well. And are we saying that the movements perhaps aren't justified and we will see a little bit more weakness coming through for the currency?
That's certainly our base case scenario, Stephen. We see that the rand has a weakening bias for most of 2011, and that's really just based on the fact that at the moment the rand's fundamentals aren't looking particularly strong. We're not expecting particularly robust growth, and if you add to that the fact that we're expecting interest rates to remain on hold and steadily rising inflation for most of the year, on a fundamental basis, there really isn't much impetus at this point for the rand to continue to strengthen much further.
We had manufacturing numbers out from a number of regions and countries yesterday, and for the most part it looked to be quite good. We had the US ISM number up at 57 from 56.6. EU PMI also looking positive. Chinese PMI, though, coming out over the weekend, not quite as positive.
Yes, Stephen. What we've seen in China is that the authorities have put in place a range of tightening measures, particularly on the monetary policy front. So that may have played into that surprising dip in the Chinese PMI. But on the other hand, as you said, there were some encouraging data out of the EU and the US, particularly in the EU. The PMI bounced to 57 points, and that was quite a bit better than the reading for November. So the growth in those countries on the manufacturing side certainly seems to be quite positive, but the China number is quite worrying, and that would be something that we would have to watch in the coming months.
Are we starting to see any trends coming out of the United States of more positive economic data, such as the ISM yesterday, or does it appear to still be a little bit mixed?
Still very mixed, Stephen, and certainly as far as data like the manufacturing sector goes, things are looking quite good. But again, on the housing sector, it definitely looks like things are still struggling on that front. And again, labor market's still quite weak. And with the US consumer comprising such a big part of that economy, one really would be looking to the housing and labor markets to get, to become quite confident in the US recovery. So until those numbers start looking meaningfully better, the outlook for the US economy is still quite fragile.
Looking in towards the rest of the week, what's the market going to be focusing on? Any big releases coming out?
Well, on the South African side, Stephen, we'll be waiting for the end of the week. We have SA reserves as well as vehicle sales. And internationally, markets will be especially keen on the jobless claims and unemployment data for December. That's the US data. So I think all really things in a bit of a holding pattern, and Friday will be the big data week.